Welcome to the WealthStack podcast. I'm your host, Shannon Rosic, the director of WealthStack Content and Solutions. I'm joined by Adam Blumberg, co-founder of Interaxis, and today's topic, crypto's journey to the mainstream. We've got to talk about it, and this is certainly a timely discussion based on all the recent news. Adam, thanks so much for coming on the podcast.
Shannon, thanks so much for having me. Like you said, it is timely. It's been a long time coming, and really happy to talk with you about it today.
So before we dive into our first segment, I do want to start with your background. Very interesting, obviously, advisor, entrepreneur, a lot to talk about. And I always joke that this is the hardest question you'll get in this conversation. But tell me about what makes Adam, well, Adam at the end of the day, and how you ultimately got into financial services.
If I want to go way back, I was actually a finance major in college at the University of Texas at Austin, hook 'em horns. And my first jobs were in finance. Then I got into technology because in 99, 2000, 2001, that's the thing you did, right? It was tech, it was hot. So I actually started a technology company back in 2002, which I sold in 2008. So I was a little bit in tech, but remember, I was still a finance guy. And I sold my business in 08, got back into financial services because I kind of understood finance better than I understood, internet technology at the time. And I started my financial services journey back in 2009 with Mass Mutual. Started my own RIA, left Mass Mutual, met my partner, Ron Dixon. We started our own RIA in sometime in there. I don't even remember what year it was exactly. But we had our own RIA for over a decade. And it was in 2017 or so that Ron was constantly talking to me about Bitcoin and always telling me about Bitcoin and you should be in Bitcoin. And I was one of those financial advisors that was the typical, I don't believe in it. I don't understand it. I don't understand why it has value. But, and this is kind of part of the funny story and a little bit sad, our house, living in Houston, Texas at the time, our house flooded in 2017 in Hurricane Harvey. I had a whole bunch of insurance money from that and decided to buy a little bit of crypto. I didn't know what to do. I went on Coinbase. I bought some crypto. It went up. I bought some more crypto. It kept going up. I got introduced to the 24/7 nature of crypto, which means anytime I woke up in the middle of the night, I checked my phone to see where my prices were. And I thought I was going to be retired in like a year. This was the easiest thing ever. It just kept going up. But I was always staring at prices to the point that my wife at one point asked me if I was having an affair because I would disappear and stare at my phone for 45 minutes and then reappear. And she actually had this conversation. She goes, "Are you having an affair?" And I said, "I don't know what you're talking about." She goes, "You went upstairs to change clothes last week and you were there for 30 minutes and you came downstairs staring at your phone."
Oh no,
And
you're giving all the signs.
yeah, and a little piece of me was like, you know what? There's therapy for having an affair. There's not a whole lot of therapy for, I took our insurance money from our flooded house and sunk it into magic internet money to hope to make more. So should I just tell her I am having one? But I told her about this crypto thing, and I really, really went down the rabbit hole because it reminded me so much of the early days of the internet, which is when I was in college. I was in college 93 to 97. It was the early days of the internet, Amazon, Yahoo, eBay, and thinking through how the growth of the internet went. I said, this is the same thing. And I'm in an age where I better jump on this because I'm not going to get a whole lot of opportunities to jump on a revolutionary technology like this and get to explain it to people, get to understand it, and get to say, look, based on my experience with the growth of technology in the internet, here's what I think is going to come. And my experience in finance as a finance major, and then as a financial advisor, I think I can kind of make an impact. I think I can help people understand this. And that's when in 2019, Ron and I launched a YouTube channel to explain crypto, blockchain, Bitcoin, not in a way where we're trying to get anyone to buy it, but let me explain to you how this works from the perspective of a financial advisor. And as you know, Shannon, let me explain to you how the financial system works. Most people don't understand that. So we got to work backwards to work forwards. And then we said, you know what, as financial advisors, it would really help if we started actually teaching courses, if we started teaching financial advisors how crypto and blockchain and Bitcoin work, how to make it a part of their practice. That's when we started our company, Interaxis, to do just that.
And I want to dive into Interaxis a little bit more. You got into a little bit, and I can only imagine how a conversation went with your wife explaining how you took insurance money and sunk it into crypto. But, why are you so passionate about providing education to advisors around crypto and decentralized finance and blockchain and things like that?
I'm passionate about it because I think it's really important. I think it's important sometimes for advisors to get out of their comfort zone a little bit and to rethink the financial system and to rethink the advice they give. You and I both know that for the last, 15, 16 years, with virtually zero interest rates, the stock market's equities have just gone up. And it's, I don't want to say advisors have become lazy because that's not it. I know they work really hard at what they do,
But they
but
rode the wave. It was all about the
it,
gains for the last
right.
decade or so.
But really having to think about what the financial system is and what the economic system is, and it's getting money from where it's inefficient to where it is more efficient, and how we can be a part of that, and how we can be a part of helping clients. And, on top of that, I think it's important because somehow, like, I understand it. I read about it, even though reading white papers in 2017 and 2018 was not easy. I learned about it. And for some reason, I apologize for my ego coming out, but I'm decent at explaining it in a way that it makes sense. And I'll say this, Shannon, so many of like the kind of crypto bros and crypto people are very heavy on, you have to be all in on decentralization, and you have to be all in on Austrian economics and all this. And if you weren't advising people to get into Bitcoin 5 years ago, people should fire their advisor. And I'm here to tell those people, the crypto bros, look, advisors have other things to do. We have 100,000 arrows in our quiver to think about, and we have IRAs and retirement plans and withdrawals, and we have kids going to college, and we have mortgages and all those other things to think about for clients, that we can't just drop everything and learn about Bitcoin. And so I also want to be the one on the side of the advisors and the side of this industry to say, we like, I get that Bitcoin is important. I get that crypto and DeFi and Ethereum and smart contracts and all that is in custody, and all the things that are going to come are important. But I also want to make sure that on the crypto side, they get that for financial advisors, this is not easy. It's not easy to just go, all right, I'm totally cool with putting my clients in 10% crypto. How do I do that? It's not an easy decision to make. It's not an easy thing to learn. And there are reasons why it hasn't happened yet. And so I kind of want to be on the side of the advisors as well. But for those reasons, Shannon, I don't even know if I fully answered your question, but I want to explain it to the advisors so that they get not only how to help their clients now, but in the future, get how this technology is going to impact financial services, going to impact their business, their industry, their clients, but also help the crypto side understand this is how we talk to advisors so that they can actually help their clients allocate, and eventually they can help their clients adopt the blockchain technology in crypto.
And I know you called out ego, but it is not ego by any means, because you are great at explaining this and you have that unique perspective because you have been in financial services. You've been an advisor. Like you said, you launched your own RIA. So you have that perspective of both sides, which I think is really important. So I appreciate that background and context. And I want to dive into our first segment that I call Stats All, folks. And we have to talk about the recent rally that we've seen over these last few weeks. Bitcoin rose to close to 69,000. That was around March 5th, and well above its $44,000 valuation at the start of the year. What are you seeing here? What's driving that rally right now?
Well, a huge part of it, of course, was the approval of the Bitcoin spot ETFs, right? I mean, it's just crazy amounts of money, record numbers of inflows into all of these ETFs, especially BlackRock, Fidelity, Bitwise, just unbelievable amounts of money flowing in there, more than we've ever seen for any ETFs in this short amount of time. And so that's a huge part of it. And if anyone understands Bitcoin, they know that there is a verifiably scarce supply. There will only ever be 21 million Bitcoin ever created. And so when you increase demand like you have in the last several weeks, those ETFs have to buy from somebody. And there are a lot of people like Michael Saylor who are not selling anytime soon. So they just have to bid the price up. They have to continue to bid the price up. And then we get caught in this cycle that says they bid the price up, the price of the ETFs go up. There's FOMO from investors, there's FOMO from advisors. They want to jump in and be a part of this. Hopefully it's not just FOMO. Hopefully they're understanding what the investment theses are. And by buying more of the ETFs, that creates more demand for a scarce asset, which throws the price up even more. So you have this cyclical part, especially of Bitcoin, that says the ETFs, it's one of the only ETFs I can think of ever where the ETF actually significantly impacts the price of the underlying asset. It's not the other way around. The ETF significantly impacts the price of the underlying asset. And I don't know that we've ever seen that. Maybe gold, but I wasn't really around. I don't remember gold ETFs being launched. And I certainly wasn't in the industry. So I don't think we've ever seen anything like that. So that is playing a huge role in this, is the inflows, the investor interest in Bitcoin. And that doesn't even include the halving that's coming up, which means we're going to cut the new supply in half starting in April. That is playing a role as well, in that advisors and other people are understanding that usually starts a rally in the price of Bitcoin. It usually starts with the halving and goes up because, again, we're going to have less supply, more demand, and whether or not I'm a finance major doesn't matter. If you've taken any sort of economics, you know, more demand, less supply usually equals price go up.
And like you said, the big news early this year was that SEC approval of spot Bitcoin ETFs, and the advent of ETFs on closely regulated US stock exchanges really heralds a positive change. So in your opinion, outside of this SEC approval, what has been the pivotal moment or development that propelled cryptocurrency into mainstream financial conversations? Obviously, the perception of crypto is changing among traditional investors and financial institutions.
Well, look, I don't know if there's an other than. I think the SEC approvals were a big deal. But if we want to go back before that, there have been, hints and drops along the way that says either traditional institutions are starting to adopt or starting to use. Like Franklin Templeton, which is a huge traditional financial company, they've been operating validator nodes, which I don't know if anyone in here knows what validator nodes are, but they've been heavily into crypto for years, and they obviously have a spot Bitcoin ETF. Fidelity has been custodying Bitcoin and ETH for years, so they've been into it for a while. So traditional companies have been into it. JP Morgan, even with Jamie Dimon being vehemently anti-Bitcoin, at least in public, in the background, they've been building on top of blockchain technology. So they've been using the technology. So whether we think it's going mainstream or not in the public, it's going mainstream behind the scenes. But then when you have the likes of Larry Fink coming out, right, which I've referred to him several times in the last few weeks as the crypto messiah that we had no idea was coming, for him to come out and one, apply for the ETF, which you knew when they applied for it, it was done. And then to go further and go, this is only the beginning. We're going to have an ETH ETF. We're going to tokenize our funds. We're going to tokenize other assets. This is going to be a big deal, not just because we think we can ride the wave in terms of finances, but we think this is going to be incredibly impactful for the efficiency of our business and our industry. I think that's where so many people go, oh, well, if they're doing it and they're the world's largest asset manager, they've likely done their research, and therefore maybe we should take a look at all this. And maybe it's not all the crypto companies that are super interested in utilizing blockchain technology, but if BlackRock says this is going to make us tremendously more efficient, and here's why, maybe we need to sit up and pay attention.
And what I think is so interesting is that less than 2 years after the collapse of the crypto exchange FTX, which severely damaged faith in digital currencies, and as we know, sent prices absolutely plunging. And despite other past unfortunate incidents, such as, compromised wallets, according to security.org, 40% of American adults now own crypto, which is up from 30% from last year. And that could be around 93 million people. So is it safe to say that crypto is here to stay as a viable investment opportunity? Seems like solid adoption rates since Bitcoin's launch just back in 2009.
Sure. I think it's very safe to say that crypto is here to stay. Look, I think it's here to stay. If crypto and blockchain are here to stay as technologies, then crypto assets have to be here to stay as investment opportunities, because they have to go together. There's no way, there's no thought. I know a few years ago, there was this blockchain, not crypto kind of thing, or blockchain, not Bitcoin, but they don't really work together. And I'm not going to go into the gory details about why that is. If you want to learn more about that, hit me up, and I'm happy to tell you more about it and go into more detail. but they don't really exist without each other. And just like Shannon, the early days of the internet, which I alluded to earlier, right? We had run up in stock prices in 99 and 2000, and no one really knew what the internet did. Very few people were on it. You had to have that awful dial up, and it was just a bunch of creepy chat rooms, and that was pretty much it. Very few people sent email to each other. And the reason why was because we didn't have the infrastructure and we didn't have high-speed internet, so we didn't know what the internet was going to be. And any company who went public with a .com immediately went up in value without having any revenue. Amazon famously, right, never had a profit for years and years and years. And the joke was they made up for it in volume. And we had the crash in 2001 of NASDAQ companies, of .com companies, of their stock prices. And then after that, we built the internet. Why? Because the infrastructure came along and everyone said, oh, this is really cool that I can buy a book, any book I want, and it will get delivered to my house. And now I feel comfortable and safe putting my credit card number in. And now I'm okay with using this Google thing to search for information I want. And we got the infrastructure for it. And then we built the internet. And now we really can't imagine not using it. And we invest in companies, and we don't think of companies as internet companies. We think of them as companies, right? And we've seen so many more people build businesses and become wealthy, or at least become self-sufficient, utilizing something like Amazon as a platform to build their business than investing in Amazon, the stock, right? So it's as blockchain technology, as crypto, as Ethereum and other networks like that become the layer, that the platform that people build a business on top of, then the requisite investment in cryptocurrencies like ETH become kind of like the investment in Amazon stock. And I hope that made sense.
No, it absolutely does. And I want to talk to, coming from the advisor perspective, despite how folks may feel about it, you obviously, and I think it's fair to say that you need to be able to speak to this topic with your clients. So how are you talking to folks right now when it comes to determining which products fit best in their investment strategies, or ladder them up to their philosophies within their firms? How can advisors determine what's best?
I don't know if there is a best. What I would say is, for the most part, for advisors, right, we're very wary about things like liability. We don't want to get sued. We don't want to get fined by the SEC. One, do your education. Make sure that you understand what you're talking about. Make sure that if you're going to help clients allocate to crypto, whether it's through the ETFs or through just helping them set up something like a Coinbase account and buying and managing, because you're not allowed to help them custody assets, or you're going to work with a custodian like a BitGo or Anchorage and a platform on top of that. One, the education. Two, do your due diligence. And three, look, in the absence of having an unbelievable amount of in-depth knowledge about crypto, and in the absence of your clients having this crazy amount of knowledge, I say you stick to the big guns, right? You stick to like Bitcoin, ETH for the most part. And I'm not saying that you have to only invest in those, but those are likely not going away. They are less likely to be manipulated. They are less likely to see the huge amounts of volatility we see in other tokens that might go up and down, that might have less of a value structure to them. So when in doubt, if you haven't gone down significant rabbit holes, and you can't do all that due diligence on every single token, you stick to the big ones like Bitcoin and ETH. If you don't want to do your due diligence on custody, stick to the Bitcoin ETF. If you want to be able to converse with your clients about where it fits into their portfolio, what the risks are, what the liquidity issues are, understand that these things trade 24/7, 365. And so we had a big run up over this past weekend. So if you had your clients in the Bitcoin spot ETF Friday, it was a very different price come Monday morning. Like, understanding all of those things. And then, as I've said over and over again, stick with the big guns for now until you've kind of learned it and understood it, and can do more due diligence on other crypto assets, because Bitcoin, obviously with the ETF, is here to stay. ETH could very likely have an ETF coming up soon. And that's a way as an advisor to kind of stay safe.
On behalf of WealthManagement.com, we invite you to join us on May 13th through 16th in Hollywood, Florida, for WealthStack, part of Wealth Management Edge. Our agenda is designed to power a new generation of growth-oriented advisors with the latest innovations and trends and technology strategies. From captivating keynote speakers to interactive workshops, dedicated think tanks, a dynamic exhibit hall, and hands-on demonstrations of cutting-edge technologies, you'll leave with a deep understanding of how to accelerate growth at your practice. Use promo code podcast20 to save 20% off your registration. Visit wealthmanagementedge-event.com for more information.
So what would you say then is the most important piece of advice you would give to financial advisors who are just beginning to explore this world of cryptocurrency investments for their clients, beyond obviously being educated?
Being educated, right. Selfishly and self-centeredly, be educated. Let me teach you about it. Two is, I would say, have an open mind about it. Have an open mind, and not have an open mind like, yeah, I should put crypto in a portfolio, but have an open mind as to your idea of value, your idea of what is a viable investment. And think about those that you might see on something like a mainstream media. And I don't mean to be totally against them, but think about who's doing the talking, what they're saying about it, whether they're pro-crypto or anti-crypto. Again, having that education and having the open mind enough to go, this person's saying X, I need to do a little bit more research, and have an open mind and be willing to talk to your clients about what they have, why they have it, thinking about not only crypto, but alternative investments, and about how clients are more interested in that, and thinking through how the world is different, because now we have interest rates that have moved up, because now we have geopolitical unrest all over the world that unfortunately we all know about on a minute by minute basis. Think about how that's going to impact now and in the future. And again, that open mind, in addition to the education, I think helps quite a bit. And that's going to set you down the road of like, okay, now from a tactical perspective, what do I need to do? Am I going to go into the ETFs? Am I going to, set up custody at one of these custodians with a platform on top of it to where I can manage my client assets under my own AUM? That's very tactical. It starts with, as you said, the education and the open mind enough to go, maybe the assets, the things that I've thought about from a value perspective in the past are changing. I don't always have to look at cash flowing assets as something to invest in. Maybe there are other ways that I can invest in something that has value, but is not the traditional way. And this is coming from someone, again, who is a finance major and is all about discounted cash flows and all that, but having to look at things like Bitcoin and ETH and go, where does the value come from? And am I, as an advisor, able to articulate that and think logically about that to the point that I feel comfortable putting my clients in those investments?
And I want to quickly address it because we obviously are in a highly regulated market. So let's just walk through the current regulatory landscape when it comes to all of this, big picture, what's happening here. Because, for instance, while activities in crypto markets often mirror those in traditional financial services, they're typically delivered in a novel way using, say, distributed ledgers. And that can really be challenging from a regulatory and supervisory perspective, particularly when those, resource constrained authorities can't always get to it, or it's not top of mind, right?
Right. Exactly. And regulation is a big issue with financial advisors right now with crypto. The SEC approval of the Bitcoin spot ETF was a huge deal, because even though what was it, when they approved it, in the approval, I forget what the paper is called where they approved it, they specifically said, we're not endorsing Bitcoin. It was kind of an endorsement to say, if we're going to issue this ETF and we know billions and billions of dollars are going to flow into it, we kind of agree that it's an investable asset, right? So that was a big help. Outside of that, regulation is a little hazy. We wish we had some regulatory clarity. Chair Gensler has said maybe ETH is a security, maybe it's not. As a matter of fact, I think the last time he was in front of Congress, there was a very distinct no answer there. So we're not 100% sure on that. We're not 100% sure on custody. As you know, within the financial advisor world, we're never sure what a qualified custodian is. It's like, you know it when you see it. So we're not 100% sure what a qualified custodian is. That's kind of a problem. So I totally get that there are regulatory concerns, but again, the approval of the spot ETF helped quite a bit towards moving us towards at least comfort with the fact that you can put clients in some of these assets, these crypto assets, and feel okay about it. That the SEC can't really come down on you for doing it because they approve the spot ETF. So how can you get upset with me about that? I think it helped in terms of 401k plans, right? There was an issue a couple of years ago when Fidelity said we're going to allow Bitcoin in 401k plans, and the Department of Labor said if you have Bitcoin in your 401k plan, we're probably going to audit you, right? Well, now anyone gets to point up to the SEC and go, well, they approved the spot ETF. Why are you upset with me about this, right? I should be allowed to let my employees invest in this within their retirement plan. So I think that opened up a lot in terms of regulation. It opened up a lot of breathing from financial advisors to say, okay, this is okay. My clients have been asking and asking and asking. And finally, I feel comfortable, at least with Bitcoin. And if there's an ETH spot ETF approved this year, I can feel comfortable at least with that. And as I said, those are the big two. And if you allocate to those big two for your clients at a reasonable percentage, 2 to 5% or something, you likely should be okay from a regulatory perspective. But as I said, it's a lot of it's up in the air. This is a huge election year. So regulation is going to be a little bit center stage, and whoever wins both the presidency, the Senate, the House, that's going to impact what happens with crypto in the future. And I'm not here to pick a side or anything, but it's definitely going to impact what happens. And especially when we have the Senate and the House that are so close right now to one side taking over the other, it could have a significant impact this year.
Absolutely. Well, so a bit of wait and see, but hopefully moving in the right direction. But speaking of moving in the right direction, it is time for segment 2 of this episode, Adam, which is Ask Us Anything, where I've gone out to the social universe and asked them to submit questions they want answered by you. And we certainly had some folks slide into the DMs this week. So I'm putting you in the hot seat. And the first question we have for you is, what do you recommend when it comes to rebalancing crypto in a portfolio?
What do I recommend when it comes to rebalancing crypto in a portfolio? Interesting, because we had that question come up in one of our live sessions a couple weeks ago. And I don't think I recommend one thing or the other. And I apologize for taking that tact on this question. What we talked about was you're going to have kind of an investment thesis with your client. And it might be a client by client basis, it might be with your practice that says, look, and I'll talk about Bitcoin first. It might say, look, I think Bitcoin is going to be the store of value, this inflation hedge. And I think based on the fact that there are so many more dollars being printed or euros being printed or yen being printed or whatever it might be, that the value is just going to cruise up over the next several years. And I don't care about the volatility in between. And therefore, I'm going to allocate X% right now, and I'm just going to let it ride. Right. And I'm not here to choose when the top and bottoms are. And I don't want to get in that game because I can't control that. I put my money in and I'm going to hold it for 5 years. That's our investment thesis, unless something comes along and upsets that, right? Something like the US government says Bitcoin is totally illegal. So you keep with the investment thesis and go, look, I don't care if Bitcoin gets to 12% of my portfolio. My thesis is 5 years and I'm going to stick with that. Which is perfectly acceptable, because if we look back at who has become incredibly wealthy in Bitcoin, it's people that have just held it. Those that have traded it have not, but the holders have just become incredibly wealthy. So that's one aspect. That's one side of it. The other side could be, we have all sorts of statistics and data that say, if you hold Bitcoin, especially, and Bitcoin and ETH kind of move simultaneously, so it could be both, and you rebalance regularly, quarterly, whatever it might be, even if you have a 2.5% allocation to crypto, you still are going to outperform the market because they are relatively volatile, because you're going to hit those tops and bottoms pretty well, because when they go up and you sell and you get into some other assets that might be down a little bit, you're going to get to take advantage of efficient markets and efficient portfolio theory. That will work as well. What I would say is have a plan and stick to it. Choose one and stick to it. Don't try to alternate back and forth. Don't try to call the top and bottom. Don't listen to people on Twitter and CNBC and wherever else that are saying this is the top, this is the bottom. They don't know. So if I want to go back to an earlier question, Shannon, what should advisors think? Nobody knows what's going to happen to the price. Don't listen to any of them. Have an investment thesis that says, here's why I'm investing in it, and stick to that. And if part of it is, look, it's volatile, but I think it's going up over the long term and I'm going to rebalance, stick with that. If it's, I think it's going up long term because there are so many more dollars being printed. Stick with that. Don't alternate, don't fluctuate, and definitely don't do it based on what someone said on a podcast like this or what someone has said on Twitter or whatever. They just don't know, and they're usually wrong.
And bring up an interesting point around volatility. We had another question around it actually. How do you address the volatility and security concerns associated with crypto, especially when it comes to educating other advisors about it to speak to their clients?
I think you address it by having the conversation. If you're the advisor and you're talking to your client about it, you just have the conversation and set the expectations up front. This is our investment thesis. This is why we're getting into this. It's because it's either, again, long-term, we're going to rebalance regularly. Don't call me Sunday at 2 a.m. because the price dropped because something happened in Asia. We're just going to stick with this. And that's the expectation here. As an advisor, it takes a lot to get through that because we don't have assets as advisors that trade 24/7, 365 and not regular market hours. So I think a big part of it with the volatility and the liquidity is you just set the expectation. We understand this is a volatile asset. I don't want to hear about you read about this person who said it's the top or the bottom or we're going to get in more. We're going to stick to it because that's my job as your advisor is to be the person who helps you with your emotions. I mean, I'm sure have talked so many times about behavioral finance, about how when you give people the opportunity to control their own portfolios, they usually do very poorly because they're emotional about it. And my job as the advisor is to take the emotion out of it. And so we're going to pick a thesis. We're going to go with it. The expectation is it might be tremendously volatile. Sometimes we're going to know why it moves. Sometimes we're not. I'm happy to talk to you about why, but we're not going to keep moving in and out. And we're certainly not going to go jump into meme coins or ape coins or whatever it is, just because someone made 100 times their money. That's not my job as your advisor. If you want to gamble, if you want to speculate, you can go do it elsewhere. That I think addresses a lot of the volatility and expectation.
I would agree. So last question for the segment that we received. Does crypto have fundamental value? How do I explain that to my clients?
All right. This is a fun one. So, well, I'll start with this, and it's kind of a non-answer to the question. It's the value of anything is what someone is willing to pay for it. Right. And a lot of people will say, especially in terms of crypto, it's the greater fool theory. Who's willing to buy this? Who's willing to pay more for this than I am? And I would kind of push back on that and say that pretty much defines almost all investments, right? Almost all investments you're going to have, especially if we look at equities markets for the last 15 years, is who's willing to pay more for this than I am. And that's why I'm trying to hold this, because don't think for a second that most of those companies' prices are driven by earnings. Right? They're driven by who's willing to have more money and pay for them. So then the next question is, do they have value? And that's where we have to kind of rethink value a little bit. Does it have value for me to hold on to an asset like Bitcoin that has a verifiably scarce supply because there are more dollars being printed? What is my reasoning for doing that? Is my reasoning because if I hold on to the Bitcoin and there's more dollars and the price of Bitcoin goes up, I can sell the Bitcoin later and have more dollars and pay for my stuff, pay for my life? Which is what we do which is what we do as advisors anyway. You're planning for someone's retirement. You're investing in equities usually. You hope they go up in value because those companies are making more money, because there's more money going to the stock market, because there's a greater fool that's willing to pay more for it than I am. And eventually, when I need to fund my retirement, I sell some of that and I fund my retirement. This is really no different. It's just that we see quicker cycles. We see more volatility. So that's Bitcoin, is understanding that the value comes from the verifiably scarce supply. But honestly, Shannon, part of the value comes because other people with a lot of money have said it has a value, right? Bitcoin started out with absolutely zero value and has built value because eventually you had smart financial people that said, I want to put money into this, and this is where I'm going. This is what I've decided is where I'm going to store money. Paul Tudor Jones did it in 2020. Either Bill Miller or Stanley Druckenmiller did it after. Michael Saylor has done it to an extreme. And now we've seen other funds, we've seen pension plans, and now we've seen the likes of BlackRock and Fidelity say this is a decent place to park money because we get it and it's safe. If you want to go to ETH, the crypto asset based on Ethereum, that's a different valuation structure, but it's, are people going to use this network? And therefore, is the token that represents this network going to be in demand more so than the supply of that token? And so, yes, they have value, but they don't necessarily fit into what we've always been taught and thought of as a value in the past. Again, it's not always discounted cash flows anymore. It is a demand for a particular asset that is absolutely required to make the network go. Do I think there is going to be more demand on that network or not? So I think they have value, but there has to be a belief that these blockchain networks are going to continue to grow in terms of actual adoption. And that's what has to drive and inform the value of the tokens. So quick answer is yes, I think they have value, and you better get some education to understand why.
Well, Adam, I appreciate you being put on the spot and your incredibly insightful answers. I certainly learned something with that, with those remarks as well. So appreciate it. But we have come to our final and what might be my favorite segment, Stack It or Whack It. So I'm going to throw out a few technologies, not necessarily always WealthTech related. And sometimes they're just random thoughts that I have, especially if I know you. And you tell me if they are essentially worth the hype or not. So stack it, use it, love it, whack it, lose it, hate it. So the first one I have for you, I think I probably know the answer, but I just want to hear it from you. Stack or whack, decentralized finance.
I'm going to say stack, but I'm probably going to limit it a little bit. So all of decentralized finance, not necessarily, but for the most part, stack it.
All right. And second one I have for you, big topic, Web3. Stack it or whack it.
Definitely stacking Web3. Definitely stacking Web3. It's essentially a way that I can have a lot more control over my data and my assets. And if we look back a little bit in terms of what Facebook and Google and Amazon have done with our data, the ability to have more control over that, we're seeing with technologies like Farcaster in terms of social media, in terms of what Twitter and YouTube and everything have done to creators. I think with Web3 and the ability to control my data and control my assets more, definitely stacking that.
Love it. 2 stacks. Well, Adam, it's been an absolute pleasure getting to know you and appreciate the deep dive into all things Bitcoin, crypto, and the current landscape. Feel free to tell listeners where they can find out more about you and what you're working on at Interaxis.
Sure. Thank you so much for having me on here, Shannon. I love talking about this stuff. I get really jazzed up about it. So on Twitter, on Twitter, I'm at, or X, I apologize.
I still call it Twitter.
I still call it Twitter. I always will. I'm old school like that. At Interaxis 8, the number 8, Interaxis 8 on Twitter. And you can find us also Interaxis.io. And on LinkedIn, I'm Adam Blumberg, and I'm the guy who looks like someone talking about crypto on LinkedIn.
And I'm also going to give your YouTube channel a shout out because that's really interesting as well.
Yeah, YouTube. I apologize. On YouTube, you can find us. Just search Interaxis on YouTube, and you'll find our YouTube channel.
Fantastic. And be sure to like and subscribe to the WealthStack podcast on all major podcasting platforms, and follow all things WealthStack on wealthmanagement.com, LinkedIn, and Twitter. And if you want the in-person WealthStack experience and get to see Adam in person, you can join us May 13th through 16th at the Diplomat in Hollywood, Florida for Wealth Management Edge. Thank you all for tuning in.